Hey guys, this is TWETV here, and I'm just bringing you guys another YouTube video. I feel like we definitely need to bring this up again, or at least define it in a different way. Hopefully, this kind of helps everyone get a better understanding of how, ICT, smart money concepts, how all of it works. Because in theory, it's the same thing to a certain degree. Different terminologies, yeah, they may apply certain things a little bit differently, but you're looking for the exact same stuff. You're finding liquidity through market structure, right? And you're identifying it. And once you identify it, you develop an entry model. So kind of like what I have here, right? I have market structure formed. We have a transaction. Some people call it a flip. Some people call a switch between a supply and demand. Demand supply does not matter. That's a whole nother terminology right there. We're aiming for the market to pull into, in this case, right? We had a demand, right? It reacted, it validated that. And once it was validated, we understand that, okay, the flip, the transaction, right? That's telling me, oh, maybe the demand is not in control. Maybe the supply is, right? And in our case here, we're also paying attention to the fair value gap, or there's so many different ways of calling it, but let's just say the fair value gap. That is the magnet in the market. So if I kind of, mark it out here real quick to the side. Wait, you guys can't really see that. Hold on. There we go. So fair value gap, what is it exactly? You should look at it. It's a magnet in the market. You want to find POIs right around it. That's ideally what you want to look for, right? And that goes both ways. It needs to fill it either way. It's going to at some point. So if you want to really narrow down your strategy, I would say wait for those to align. Now, here's the very bit that a lot of people start to break off and develop this into their own strategy. This is what makes your strategy unique. I always tell people, when it comes down to the entry model, because ultimately, what is an entry model? You're looking for a list of things to align, right, or to happen for you to get into this trade. Now, sometimes that may depend on what's in that list and what may happen in a specific order. So in this case, I'm looking to get an idea of who's actually in control, or was this just a one-time thing that it respected, right? Yeah, it's tapping into that higher time frame supply that we may have here, but I want to look for order flow, signs of order flow, right? So how I'm kind of taking it here is, once I found clear signs that, in this case, supply is in control, right, I can comfortably take like the second to third, point of where, the supply is being respected, right? Because that's clear signs of order flow. Now I'm going to hop into a lower time frame and take a closer look, because the biggest thing that we're trying to identify is what? We're trying to identify a possible POI, an area that we're trying to look for an entry, right? So first off, break of structure, right? Because honestly, once you identify that, it gets more and more simple. Then you have to identify where there's possible, supply or demand, and try to figure out who's in control. So this is where we collect data. In this case, we have demand. It's being respected in two cases, right? And it rushed to the upside and it broke structure. It did its job. However, this is a perfect example of how, yeah, the POI may work at that given moment in time, and it may even reveal another POI. So in this case, it revealed another demand that we can point out that, okay, after it broke structure, the market came down and reacted to it. And showing that it reacted to that POI, supply demand, whatever you want to call it. In this case, it's a demand. It's reacting to it. So it's validating that it's actually there. So with that being said, I can now use this whole section as data to help me, slowly narrow down where I'm going to be looking for an entry. So in this point here, I'm marking out the fair value gaps, right? And like I was talking about previously, you want to find POIs, right? The supply and demand around fair value gaps, because those are the market, the magnets in the market. Now, in this case, it's actually better, in my opinion, because you have two fair value gaps, and I'm already seeing a supply right here, right? This whole little section there. I mean, it depends on how much you want to mark it out. If you want to mark that whole section out, that's perfectly fine. But how I'm viewing it is, okay, we have a supply in the middle of two fair value gaps. That tells me that this first one definitely going to be filled, right, relatively quick. It's going to tap into this supply, probably run to its edge, right into the fair value gap, right, that's resting above it. At least needs to tap into it. So with that being said, that's where you're going to have those little setups on the 1 minute time frame or whatever lower time frame that you're looking at. In my case, I'm looking at the 1 minute. You're going to find possibly a setup immediately when it taps into that first fair value gap, or that first point of where it's first making contact of that 15-minute supply there. It may look similar, it may look genuine, as in you're finding a transaction kind of like this where demands are failing and supply is taking control here. It's showing clear, points of where it's taking control. It had multiple reactions. It didn't just blow through it. You don't want to find that. You want to find where it has a reaction, validates it's there, then it goes through it. So it's doing what? It's doing what liquidity is. Liquidity phase creates liquidity, right? Generates it, then sweeps it. That's what it's doing. That's what you want to see. Now we're going to take a step back and just wait for the market to pull into it. Right now it's doing literally a liquidity phase, like it created those equal highs right there. Sweeped it. Probably a lot of people got in for sells. That's perfectly normal. Sweeps through the first fair value gap, aggressively pushing into that 15-minute. I'm actually okay with that, because that's going to help filter out the possible entry models that it may mimic. So my biggest thing right now is I'm waiting for it to, obviously, it's already tapped into that 15-minute supply, obviously. But I want it to push into that fair value gap. So it's kind of between those two, kind of tapping into that fair value gap. I don't want it to blow completely through that 15-minute supply, because then, for me personally, I'm probably not going to take an entry if that's the case. Now we're going to hop into the lower time frame and kind of give you guys a run through, right, how it would be in the live market, right? And in this case, right, what am I doing? I'm trying to figure out who's in control, where I'm taking an entry off of. So in this case, it didn't hit that fair value gap, but I'm still going to test it so you guys can see what I'm talking about. We have a demand. Beautiful. It's reacting to it perfectly. Then we start to see that movement to the downside. Our first thought process is, oh, okay, there's a transaction there. Let's put a supply, right? Because it reacted to that demand perfectly. It's in that 15-minute POI. Beautiful. But like I said, you got to identify the fair value gaps around those supply and demands. Because most cases, if I see something like this and I didn't identify those fair value gaps, I'm going to take a trade right off the first one. In this case right here, I'm going to take a trade right off of it. But me knowing what I know, I am also taking a closer look and seeing like, okay, is there some form of demand, right? Because another thing that I'm also looking at is what's going to help me get to that fair value gap up there, right? Something needs, it generated liquidity and it's in the liquidity phase, but we need to figure out what's going to be, helping us, that I guess you could say fuel to get to that fair value gap. So in this case, it's this demand resting below that I marked out. I'm thinking that it's going to tap into this demand and blow through the supply. Okay, so it did blow through the supply like I was saying. And now I just proved that, okay, that's not the supply that I'm looking for. So that tells me, perfect example, if you find fair value gaps around those POIs, try to just look for it to kind of mix in between. If it rests below it in this case, I would have waited for it to blow through the fair value gap and then tap into the supply for me to look for an entry. Since in this case, it's resting above the supply, I'm going to wait for it to get to the very edge of that supply and at least wick the fair value gap. So now I'm trying to figure out, okay, who is in control? Obviously, I'm still trying to prove that this is where you're collecting data, right? Same thing. In this case, I already have a demand that's telling me, okay, we're pushing to the upside. Most likely, I'm going to find some demands along the way to help me figure out where that transaction is going to be, right? And we're already slowly making our way up to that fair value gap, right? Let me just adjust that. And now we're slowly making our way up, right? And I'm going to go ahead and start marking out demands that, I see, and I'm hoping for a reaction. And not just a reaction, I'm hoping for it to then sweep it to help me figure out where that supply is going to be, that transaction. Wow. Now, in this case, I don't see a transaction immediately because it hasn't tapped into that fair value gap. Yeah, I'm putting it for hopefully it's going to fail, but I'm not really hoping for it right now. So I'm going to wait for it to push up a little bit more. Another thing that I'm seeing here is I'm not seeing a lot of push to the upside from this demand. So I think it might actually pull into demand that's resting right below it. Actually, wait it out a little bit. See, okay. Yeah, so it's definitely going to tap into this other demand here. So hopefully that's the demand that gives us that final push to the upside that we're looking for. And in this case, that looks good. Yeah. Okay, yeah, that's definitely looking like the setup that I'm looking for. All right, so it finally wicked it. Beautiful. Now, I'm going to go ahead and, just bring this aside real quick. And I'm going to start focusing on, okay, where's going to be my demand that I'm going to look for a reaction off of, and then a transaction, and then an entry on the supply. Because now we've met literally what I'm looking for. We blew through the 15-minute to a certain degree, right? It's reacting to it, obviously, but it finally came to the fair value gap, right? It's in between those two zones that I was looking for. Now I'm looking for a reaction off of this. And okay, we got that reaction, and then it sweeped it. Beautiful. Now, in this case, what I like to do is, well, you got to think about one big thing. You're trading with a broker that probably has terrible spreads. That's just what it is. There are some brokers out there that have amazing spreads, don't get me wrong. But 9 times out of 10, everyone's with a broker that doesn't have good spreads. So I'm just going to mark out this whole section and be generous on your supply, because last thing you want to do is get wicked out, or maybe because, slippage, you just don't want to get caught up with all that. So in this case, I'm looking at like, okay, that's going to be my entry. How you can also aim it at too is all these different, higher lows. You can definitely do that, depends on what time frame. But me, I also like to aim for a 15-minute POI. And in this case, I kind of see like a 15-minute demand, that's forming down there. So now that I got that all figured out, like I said, when it comes to your stop loss, that really just depends on your strategy. If you're trading with a prop firm or a personal account, that's also going to change. It also depends on what broker you're with. You're going to definitely feel that out if you should have a bigger stop loss, or are you comfortable with whatever stop loss you decide to do. Personally, how I look at it is, once you're in this trade, use that profit when you take partial. So let's wait for it to kind of tap into here, but use that profit. Beautiful. So use that profit to then scale in with another trade. You don't need to do the same lot size. You do not, but you can definitely, that's like literally just reinvesting into your business, because that's how you should look at this, as like a business. In this case, now that it broke that low right there, I always say, if you want to be very aggressive with managing your trades, move your stop loss to break even after the first one. Another thing too is if you don't want to do that, you want to be kind of laid back, I would say, then wait for 2 breaks. And I'm just marking out different points that I see like, okay, there's a fair value gap that definitely was used as liquidity, and we have a transaction. And this is the point that I talk about. You can re-enter the market, right? Because that's ultimately what you're doing. You're literally trying to figure out where the institutions are entering, right? Or at least figure out their first footprint to then ride the wave. They're going to give multiple opportunities, right? Because what they're doing is generating liquidity, sweeping liquidity, generating liquidity, sweeping it. Same cycle over and over and over again. Now, I'm just going to kind of give you guys an example, right? So I'm aiming for a 15-minute demand, but I mean, you can have fun with this and ultimately look at it as what? Look at it as like, okay, that's all liquidity that eventually will be swept, right? If you're following the overall higher time frame move, right? It's going to the downside right now, right? Not necessarily we're in a downtrend, but I broke a high, right? And then when it broke a high, then it pulled back, and then it pulled back into, obviously, those 15-minute supplies, right? So it needs to make an actual pullback again for, to create a higher low eventually, then go to the upside, create a higher high eventually. But you're taking a counter trend trade if you really think about it. If anyone needs extra help, all my links are in my bio. We have a boot camp that's starting on March 7th this week. And we also have signals, or you can even DM me on Discord. I'll help you out. As always, stay profitable.